Stocks sank Thursday on more signs of discord on the U.S. fiscal cliff talks and questions about the latest FOMC announcement. Now, Sarge, what do you think is the economic impact of the Fed's move to tie interest rates with the unemployment rate?
Well, you know, what they're doing here, it's very interesting, all right? Now, the Fed funds rate now will be between 0 and a quarter of a point forever, all right? This $45 billion purchasing of treasuries, coupled with the $40 billion a month purchasing of mortgage-backed securities, will go on and on and on every month as long as unemployment remains above 6.5%, which it's a mile away, and consumer-level inflation stays below 2.5%. If this plan had been in place since the beginning of this crisis back, let's say October of 08, let's pick that for a month. Now, the Fed's balance sheet right now is $2.8 trillion. If this plan had been in place the whole time, if they went to it right away, the balance sheet would be $7.5 trillion by now. That gives you an idea of how much more aggressive this is than anything they've done before. Because we kind of expected it, we're kind of forgetting how aggressive it is. This is really, really aggressive quantitative easing. And, you know, will it work? The Bank of Japan invented quantitative easing, all right? 20 years later, they're still in malaise. Just because something works in the textbooks, it doesn't always work. So I do have my doubts. I'd love to see it work, but what happens the day that the Fed wants to sell bonds the same day the Treasury wants to sell bonds? Because that could happen, because they're going to own a lot of bonds. That day, the U.S. government won't be able to fund itself, and it's a day pretty far in the future, but it's a day that we have to worry about.
And on the fiscal cliff front, there's obviously more signs of discord over the fiscal cliff talks. Now, what if U.S. legislators ultimately were able to reach a bipartisan agreement on the U.S. fiscal cliff talks?
That would be wonderful, but right now I'm a little angry at those guys. All right, they did it again today, what we've been complaining about for a while now. Okay, they came out today and they spoke and they pushed the market down. All right, today Speaker Boehner and Senator Reid both spoke. They both said they weren't getting anywhere. The market went to much lower levels from where it was this morning. Whoa, but before the bell, now Speaker Boehner and the President are going to have a meeting at 5 p.m., so now the market comes up towards the end of the day. So they pushed the market around, let's say that. And it may be innocent, but at its very best, it's still political brinkmanship. It's gamesmanship. And they're just trying to get an edge on the other guy, an edge on the media, so that they are perceived as the good guy, the hero in the end. And it annoys the heck out of me. Just let us know when you got something to say. Don't tell us when you don't have something to say, because that's a load of garbage.
Do you expect any constructive comments to come out of the meeting between President Obama and House Speaker Boehner tomorrow?
It would be splendid. And the market will move that in the right direction if they do that. Yeah, I don't think they'll say we have a deal. They'll say something like, we have made progress, and then the market will go up. Or they'll say, oh, we're not seeing eye to eye on this. The Republicans don't want to raise taxes, or the Democrats don't want to cut the budget, and they'll push the market down. So as a trader, I find it very troubling.
Thanks, Sarge.